You're watching Notepad. I'm your host, Ibrahim Sani. Today we shall touch on a very interesting subject called Islamic Finance, a subject that is particularly close to my heart. I've been following this industry for quite some time. In the studio with me is Bashar Al Natoor, Fitch Ratings Global Head of Islamic Finance, here to discuss all the ongoings and perhaps some interesting challenges that might lie ahead in terms of this sector. Bashar, thanks again very much for joining us this evening. We shall start on the, overall landscape of Islamic finance. Malaysia has been a big proponent of Islamic finance. We have introduced legislation in this sector since the early 80s. How has things been over the past few, 30, 40 years, progressing until this point in time?
Thank you for having me. I think it is fair to say that in terms of the frameworks and regulations and standardization, and these are key issues in the Islamic finance industry globally, and Malaysia has evolved very well, I have to say, and it stands in an advanced footing compared to other jurisdictions. So if you look at the way that the functioning of Islamic banks in terms of centralized Sharia board, in terms of having centralized products, in terms of their even market share in a country that is not 100% Muslim population, or not even 90%. I mean, and I'm saying that because if you look at Turkey or Indonesia, you're talking about 5 to 6%, and here you're talking about a substantial part and a systemic part of the landscape of the Islamic finance, whether it's Islamic banks or whether it's takaful or even sukuk. So if you look at the sukuk market now, around 60% is actually sukuk, so it is actually the dominant one. If you're talking about takaful, you're talking about something around 30%, and the milestone that the Islamic bank is set by the government is to achieve 40% by 2020. And if you look at all of that, you're really talking about a lot of improvement in terms of numbers. But it's not actually only numbers. It is actually the way that the industry has evolved, because you have centralized Sharia boards, you have standardization frameworks, you have some clarity in terms of the legal aspects and enforceability when it comes to sukuk, for example, which is an issue in other countries.
But that's the point of Islamic finance. It's never about the Sharia compliance. It's about improving the back end of things, how things can be a little bit more transparent, a little bit more tangible, something that can be appreciated by many, not necessarily just for Muslims. Those are the kind of values that are currently being employed by Islamic finance, and the market is actually quite familiar with these kind of values. However, the numbers that you mentioned, it's also interesting to note that Bank Negara kind of missed their own target, because they wanted 40% retail banking assets to be Islamic financed by 2020. That number is a bit way off, and we're just a few months shy of 2020. Do you feel that it's more of a hit and miss in terms of trying to hit that target of Islamic banking, finance, particularly in some sectors of the Islamic financial industry? I'm talking more of retail banking, for instance. Do you think that Islamic finance is missing its mark in that space, for instance?
So I think first to talk about numbers, whether achieving it or not, it's a strategy. And so it's at the end of the day, it's a number. But as you said, it is more of really a journey that took place over a few decades, but in the last 10 years, it took a lot of momentum. So Islamic finance by nature and Islamic banking by nature is something that is more concentrated usually in real estate and retail. And these two sectors are one of the few sectors that are having high correlation with the economic cycle. So by nature, they are cyclical compared to other sectors. So that is something that you see. I mean, maybe not obvious in Malaysia, because as I said, it's an evolved industry, and Islamic banking is now in a similar footing. In other countries like the GCC, whether you're looking at Kuwait or other example, you see that more prominent there. Now, I think to the first part of your question, I think discussing with the Bank Negara and their views, and I mean 2020 is around the corner. I think the message that I get from them, they are focusing on maqasid al-Sharia. So it's not about numbers anymore. It's not about frameworks or establishing a playing field, because I think a substantial part of that has been achieved. It's now about, okay, what is the actual value that you look beyond that, and how you can bridge that in terms of attracting a larger audience rather than the Muslim-sensitive, Sharia-sensitive customers. And I mean, the banks are already achieving that. I mean, and this is where they're actually competing with the conventional one on a similar footing in many of the cases. So it is really now taking it not in terms of just numbers, but in taking it of a value added and the maqasid al-Sharia and where you should be as an Islamic bank rather than achieving a certain percentage.
On that note, because when you talk about Maqasid al-Sharia, we are also talking about how to improve it, how to improve things on a governance level. And we've had a lot of statements coming in from regulators, Bank Negara and many others, saying that ESG is central to this. Environmental, social and governance kind of framework is also baked into how things are going to be moving forward. And a lot of people are saying that Islamic finance is very much compatible to ESG values, and perhaps that is the next step for Islamic finance to grow into the ESG framework. What do you make of this?
Okay, a lot of things. We've in Fitch actually launched the ESG scores for corporates, banks, and sovereigns just recently this year. The thing is, we differentiated Islamic banks in two aspects of these scores, which is the governance structure and the social impact. So maybe to clarify that, so we've already recognized that if you are scoring a 3 for a factor in governance structure in like a peer-to-peer, if you're conventional, we've scored Islamic banks 1 higher, i.e. a 4, recognizing that they're exposed to that because you have a Sharia governance, you have Sharia audit, you have Sharia structure that you abide to, and the same on another aspect under the social side. So we already recognize that. Now, to say that Islamic finance is just about ESG, I think it is two ways. So first, it has a broader mandate, because at the end of the day, you are catering for something that is specific to people that are very sensitive to Islamic finance. The thing is, are Islamic banks and Islamic finance industry able to accommodate the broader base by just clarifying what are they doing and changing the way that they're doing, instead of just becoming a regular bank, i.e. you go there and get financing and do the business, and become something that is more of a value added from the aspects of Maqasid Sharia. Islamic finance is not only, so if we go back to the way we learned banking and investment, it's about risk and return. And recently we started hearing about impact, which is the ESG and Islamic finance. But Islamic finance has also a fourth pillar, which is actually structure. It's the way that you do it, it has to be done in a certain way. So I think the industry, not only in Malaysia, is facing a point where they need to choose. Do they want to continue to be niche and restricted in around just 10 countries globally, where it's really something systematic and important and growing, or they want to
be more mainstream,
and go and be more appealing to the international community, saying, okay, this is how we feel that we are contributing, whether on a social aspect or an environmental aspect or whatever, and link that to Islamic finance.
We'll take a short break. When we come back, we'll discuss a little bit more with Fitch Ratings, Bashar Al Natoor. Don't go anywhere. Thanks for staying on with us. You're watching Notepad. I'm your host, Ibrahim Sani. Today we are with Fitch Ratings Bashar Al Natoor. He's the head of Islamic Finance there. Just to highlight, the Fitch Ratings have been named as Best Islamic Finance Rating Agency for third year straight by The Asset, which is a leading financial magazine in the Asia-Pacific region. And of course, Bashar, we are talking about you observing not just Malaysia, but many other countries in place. And for the longest of time, Malaysia has been thumping its chest in terms of pushing forward Islamic finance. There is, however, and I'm going to put you in a spot here, there is a black mark in terms of Malaysia Incorporated over the past year because of the scandal that has been hit by the country, and because the country is currently undergoing its process of, I guess, rejuvenating itself in terms of improving its corporate governance, trying to find where the faults would lie in terms of the previous administration. And we can't talk much because court cases are ongoing. Do you think that Islamic finance might come up as a savior in terms of how Malaysia Incorporated can move forward in improving its image, particularly in the world of finance, moving forward?
I mean, I think there are, I'll be very blunt with you, I personally see Islamic finance sometimes being the hanger of many things. So you would either put the success or a failure on Islamic finance.
It's an easy target.
Yeah, the thing is, I have to be very fair. It is does not operate in cocoon or in isolation of its environment. So many of the issues that are actually impacting, like the development of capital market or penetration of certain markets, or even being inclusive in terms of accounts, is not really an Islamic finance issue. Yes, you could find solutions, and Islamic finance could actually bridge some of the gap, but if you have fundamental structural problems, it needs to be dealt with, whether on the conventional side or the Islamic finance side.
It doesn't matter.
And then it does, exactly. So at the end of the day, yes, but does Islamic finance have a different value? I think you started with your question saying Malaysia has been trying to put itself there. I think that's very true. So they've established frameworks, they've established regulations, centralized Sharia board, etc., etc. But all of that effort was inwards. So they were not targeting, or the achievement was internal, like achieving 60% sukuk issuance, which is the dominant one, compared to 40% bonds, which is, I mean, a big thing. But that's in local ringgit. So you're talking about local market ringgit. Achieving a substantial part of the banking industry, that's again an inward thing. If you look at the global stage, I mean, there is a lot of things where you can say, actually, other countries like Dubai and DIFC being one of the, if not the largest, actually, listing for international issuance. You can look at Indonesia, which started just recently in Islamic finance, having the first ever sovereign sukuk. And you have the size of regular issuance in US dollars, and it's substantial. You can look at other countries, I mean, achieving a substantial part of the banking. Like if you look at Saudi Arabia, 78% of finances there is actually Islamic finance, which is Islamic banks plus Islamic windows, although the dynamics and the fundamentals are different, i.e. you have 100% Muslim population. But I'm just giving you an example where you see other spots taking the spotlight, where Malaysia started earlier, where Malaysia had still have an evolved Islamic finance framework and infrastructure. But I think the focus has been inwards rather than outwards.
Well, earlier in the interview, you were mentioning sometimes it's not just about the market, sometimes it's about the business plan, sometimes it's about how you approach that kind of business proposition by the respective companies. Can the same be said about issuers themselves? Because, for instance, Cyberdynamic, a high flyer in terms of the Malaysian corporate scene, has issued a dollar sukuk and has been rated BB negative by yourself, as in by Fitch ratings. Do you think that it's more of issuers trying to get a hold into the markets that they are in, and because of the lack of, I guess, a soft back kind of business environment, not just here but globally as well, that has kind of resulted in the lack of, say, dollar sukuk issuances around the world?
I think there is three factors to look at. First, the company-specific dynamics and exposure to foreign currency and where they are. The second one is, do you have an investor pool that is ready to buy and recognize your instrument, whether it's a sukuk or a bond? And the third thing is, you will find that a lot of corporates, if they have a developed capital market, local one, it is the easier choice because they're known. You don't have to worry about the foreign currency exposure and hedging. Usually the requirement is much easier, and et cetera, et cetera, et cetera. But you are definitely appealing to a smaller investor base, and you are definitely...
Which is familiar to your business,
exactly,
familiar
but
with the market.
Yeah, so these three factors usually drive the way that a company will go for an issuance or not. If you add to that, do they have an ambition to be like a pioneer in Islamic finance or not, or they have restrictions in their article of association that they can only do financing on Islamic finance. These factors could play a role between choosing a bond or a sukuk in addition to the other three factors. So it's more than one dynamic that really determines that.
But wouldn't this basically underline the fact that sovereign must now step up their game? Because, for instance, the inaugural sovereign sukuk by Indonesia there's a lot of heraldry towards the whole, prospect of it. Right now, for instance, or Indonesia as a sovereign will be rated, and it's going to be big, it's going to be great, but not much has fallen through in terms of since the sovereign sukuk issuance. Why is that the case?
So you're talking about in Indonesia, where you have a developed sovereign international sukuk market, and also developed local market on the sovereign level, and it's not trickling down into the system.
Yeah.
So it's not going to the corporates. And I think that is something that is not only in Indonesia, to be very honest. I see that in other countries like Saudi Arabia, for example, and there the word is that the reliance of banks financing is something that is entrenched in these countries for a long time.
But we can explain Saudi Arabia, right? Because they don't diversify the industry. That's oil and gas, 100%.
Yeah, but this, even the sovereign started since 2016, 17, and 18 to issue sukuk and bonds, and they're going through that aspect. They have it internationally and they have it locally, but we don't see the same momentum yet trickling into the corporate side.
Yeah,
I think the key hurdle is that the reliance of short-term bank financing, which is easier, less complex and familiar, and maybe in some cases less costly in terms of the actual transaction cost, not the financing cost, for them to access. And that is an issue that is there. And as long as you have that and you don't have the proper incentives to take that issuer that is used to this to the capital market, whether it's a sukuk or a bond.
Even when incentives like cheaper financing cost, if you issue.
Yeah, but the thing is, cheaper financing cost is something.
That would be a big incentive.
Yeah, exactly. But it is something that you are still building. You don't have track record. So the confidence comes from track record. And the problem is you don't have track record. Yeah. In some of these countries, like Saudi Arabia, if you look at before 2015...
I'm so sorry. Yeah. Track record, it's a chicken and egg argument, right?
No. If you go back to Saudi Arabia, so before 2015, the sovereign was not issuing anything. Yeah. So you don't have a yield curve.
Yeah.
I'm talking 2015.
Yeah, of course.
And they just started issuing. So the yield curve has been building. They started issuing locally and they started issuing internationally, and they're building that. But it's not a press of a button. It is not something that you expect, okay, this is a press and then it will. Exactly. It's a long-term commitment. And I see two models, but there is a third one which is in between. Either a top-down approach where you're trying to develop Islamic finance, capital market and sukuk, and encourage corporates to diversify their funding, or an actual need and an actual investor appetite for it. So for example, the UAE, they have most of their issuance is on the corporate side, is actually international. There is the local market, dirham market, is just, is not almost exactly.
Yeah.
So it is the other way around. So they started with the international, and they're now building the local. So they've launched a new regulation in November 2018, and they're trying to work that and develop that. So it's a development story, but it is not Islamic finance potential. It's a capital market development story, and it's still at the early stage in many of these countries. And then after that, you need to go the extra mile to achieve Islamic finance and sukuk and the way to raise things from Sharia compliance.
Okay, we'll take a short break. When we come back, we'll discuss a little bit more with Fitch Ratings, Bashar Al Natoor. Don't go anywhere. We are still with Bashar Al Natoor, the head of Islamic Finance at Fitch Ratings. Bashar, I think I want to touch a little bit about how geopolitics is affecting the financial sector, particularly Islamic finance. The GCC is, I guess it's a loose coalition, because in terms of when we discuss how countries try to evolve their Islamic finance story, it can be from top down, it can be from bottom up. Top down meaning governmental regulations, or market driven, corporates driven, consumer driven. They want more, I guess, Islamic credit card or Islamic takaful, something like that, right? And while we acknowledge that there's no one size fits all, where do you see Islamic finance growing in the next decade, for instance?
Okay, I think we will continue to seeing the top 10 countries that I've talked about, which is GCC plus Malaysia, Indonesia, Turkey, and Pakistan,
Yeah.
being the core. You will see countries in North Africa like Morocco and Tunis trying to explore. You'll see other countries like the Cote d'Ivoire trying to do a sukuk here or develop a regulation there. But I think the bulk will continue in the top 10 countries. I think it needs time. I mean, we've seen the scenario of Turkey where it's still at 5%. We've seen the scenario of Indonesia where it's still at around 5 to 6%. So we could have development and movement. They have, both of these countries actually have targets of achieving 15% of the financing in their industry of being Islamic finance. But how successful is that is still to be seen. So I would say it is going to continue to be there. Now, are we going to see additional spark in the Muslim world? I would say yes, but the core will continue to be that. Are we going to see attempts coming from other countries outside the Muslim world? So like we've seen UK, we've seen Hong Kong, we've seen South Africa, Luxembourg. I think yes, but at the end of the day, the key question that the industry is going to be facing, are you going to be achieving standardization, which is a key issue that is there, and then attract confidence and understanding from a broader audience that will allow you to bridge the gap and become mainstream, or the industry will continue to be niche by design and by objective, and it's going to be restrictive in more of these countries where you have an Islamic sensitive customers or governments that have strategy to develop the sector rather than genuinely growing in beyond that, i.e. we've talked before about ESG, ethical financing, green financing, etc., etc., etc.
But it's not assuming, right? Assuming that 10 years from now, it's still going to be like this, top 10, Islamic finance will still be the top 10, and it's going to be this niche. It's not really that bad, isn't it? I mean, after all.
I mean, as we said, Saudi Arabia just started issuing 2 years back, sukuk. UAE is just developing their local markets. Kuwait did not yet issue an international sukuk. So these countries, although they are like having maybe a substantial banking side of the business on the capital market, they're not developing. Look at Takaful. They are at a very early stage compared to Malaysia and Indonesia. It is the culture and the concept and the understanding is still there about general takaful. So you're looking at medical insurance and car insurance that is driven by regulation. You're not talking about family takaful and what. So there is exactly. So the potential is really there. This is why I say this is where it is now concentrated. And I think in the coming 10 years, I'm not saying we're going to see the same model. I mean, with fintech, with ESG, with green financing, the landscape is changing, and the pace of change is faster than ever. So will Islamic banks be able to cope with this? Are they going to select strategies that will enable them to bridge the gap and move to the next level, or we're going to see the same thing? That's a question that I think the industry is facing, and the answer will be country by country rather than Islamic finance industry, because it's really fragmented. It's not really one industry.
Of course, I want to pick your brains a little bit in terms of halal industry, for instance. And very recently, I've interviewed even Salam Web, a Sharia-compliant web browser. It has become bizarre, I guess, in terms of they want to slap on Sharia compliancy for everything, including a web browser. Do you think that things are getting out of hand?
I mean, I will not. I mean, out of hand or not, that's, I think, judgmental. The way that I look at it, we've seen initiatives, for example, in Dubai. They are trying to become a halal certification, international certification hub. And this is one of, I mean, they have...
Malaysia is also trying to aspire towards that end.
Yeah, but Malaysia, I mean, if you look at Malaysia, I remember me maybe seeing the first sign of halal maybe 20 years back in Malaysia, actually. But it did not, again, it's inwards. It did not achieve international or regional or a bigger appeal. And however, Dubai started with an appeal of an international ambition. So yes, you could have, I mean, you could have that. It is something that is there. Now, the confidence, the pace that you're working on, the dynamics around how things are panning out, i.e., are you going to go the extra mile? Are people going to have the confidence and trust and acceptance of your halal brand or not? That's a big question. So I think it is yet to be seen. It's successful on a local level. So you have it in Malaysia, you have it in other countries. Dubai is trying to do it on an international certification. but it's still at early stage there. Malaysia, it has been here for decades. I mean, I remember that since before. I think they've invented actually the sign halal at one point in time. But it has always been local. It's not really going beyond that. Are they going to change the business model to become more appealing to the international community and adopt that? That is something yet to be seen.
Okay, thank you very much. I've been speaking to
My
Bashar Al Natoor, the head of Islamic Finance at Fitch Ratings. Remember, if you've missed any part of this interview, just head on to astroawani.com and watch the interviews there. Also, you can watch this interview on the AWANI app. Just download the app on the Google Play and the Apple App Store. Until next time, thanks very much for watching and goodbye. Thank you, sir.
My pleasure.
No, very good. Inshallah.